Hey everybody, I'm Rick DeLuca, and I am here today with my friend.
Jules Wrubel.
All right, Jules, why don't you tell everybody, a little bit about yourself, your company?
Sure. So my company's Lend Money, Make Money.
Okay.
I have been lending my own money since 2001, and I fell into a niche of doing gap lending, right? So folks that don't have a down payment or they need construction money, and so I've kind of created a specialty in that part of the private money lending industry.
All right.
Yeah.
Awesome. Okay. Everybody's going to love this because a lot of people want to know, how to do this. So, Jules, let's break it down. Okay.
All right.
So let's start off at the beginning. Your company, you lend money. Is it your money? Is it other people's money? Where's this money coming from?
It's my money, and I have some people who we joint venture together with.
Okay. All right. So a lot of people I meet, they want to lend money. They're looking to raise money. So first off, okay, I don't have any money, let's
Yeah.
say, and I want to become a lender. So how do I get
So
started?
you want to become a lender.
Yeah.
Okay.
How do we do this?
So there's laws,
Okay.
first of all. Okay, so I'm going to say what is real. And what's real is there are thousands, probably millions of people across the country who are actually lending their money unlicensed, and everybody knows it. Okay, so you have to decide how you want to approach if you want to loan money. Highly recommend you figure out what the laws are in your state and then decide whether or not how you're going to play.
Do any federal laws?
There are federal laws
Okay.
as well. Yeah. So again, I'm just trying to be real, right?
Right.
There's all the laws, and then there's thousands, hundreds of thousands of people loaning money. So that's that. So let's say you want to loan money. Okay, what do you want to loan it on?
Real estate.
You want to loan real estate.
That's our favorite subject here.
Okay. The number one mistake you're going to make most likely is you don't know anything about deeds of trusts, mortgages, promissory notes, or what a title company even is.
Okay.
So you're probably going to loan money to a buddy on a real estate deal without any protection and hope you get paid. But you're not actually going to hope you get paid because you're so excited to make money. You're like, it's all going to work out. And a lot of times it does. But when it doesn't,
That's when
the pain is.
Yeah. So a lot of people, they try to be like you in that position to lend money to someone, maybe for a fix and flip, right?
Yeah.
And then they go to like, oh, I got this uncle or my father has a lot of money. And they basically want to, they're making a spread, right?
Yeah.
They're taking their money and they're saying, hey, I'm going to give you 6%, 7%, whatever. And then I'm going to give it to this other person who does these fix and flips all the time. And then I'm going to charge them 12, 13%.
Yes.
And then try to make a little in between.
Absolutely.
Okay. Is it just as that simple or are there other costs involved?
It is both. That simple. And I mean, because when you're just talking about money, right? If you can borrow money at 6% and sell it at 12%,
Make 6%.
you make 6%. That's arbitrage. But if you don't mind, I'll just throw a couple words of caution.
I love arbitrage, that term.
Arbitrage is awesome. A lot of folks got caught out because they had a line of credit at 2 and 3%. They loaned it out at, say, 10 or 12%, but then their line of credit went up to 10%.
Right.
And suddenly they might be on the other side of that. They're now having to pay their bank because the rate went up.
Right.
It's a great strategy as long as you know the risk.
Okay. And that's the quick and simple, easy way to say, hey, look, I'm going to lend it for this house, this project, and then be done with it. And then you hand the money back to your relative or whatever, friend, and give it back. Now, we know that there's some other ways where people receive money from some other source, and then they do like a monthly payment to that person.
Okay.
On there. Might be that project or be a couple of projects. What's the biggest difference in running like a lending strategy or company that way?
Yeah. So a lot of times the fix and flipper does not want to make payments during the project.
Right.
Because that's cash flow and they want to put it all into the project. And that can make sense. But I see a lot of people don't set that up the right way. Okay, so like everything, it's simple but not easy. Personally, I always want payments because what happens is you have the best intentions, but you kind of forget about the stuff that's not in front of you. Okay, so again, no one's asking my advice, but I wouldn't do that unless you know exactly who you're dealing with. They have a lot of experience. You have experience with them. So yeah, so two ways. One is monthly payments. And the other way is you get all your money at the end of the project. They both work. They're both standard. It's really based on your personality, how you want to do it.
What about the structure, the company setup?
Man, I mean, like this is my favorite topic.
Yeah.
So if you're doing this out of your 401k, let's say.
Okay.
A self-directed 401k, self-directed IRA, do you need a company? You don't, because you're doing it from that structure.
Okay.
But you do need a promissory note.
Yeah.
So if you're doing it out of, a self-directed, then your fiduciary is going to require you to take certain steps. So if you're inexperienced and you're going to do it out of your self-directed IRA, you actually have some protections already built in.
Okay.
If it's coming out of your bank account, what do? You just hand it to the guy, right? Or whoever it is. So you don't need a company LLC to do this. You could, if you're going to start doing a lot of it, maybe you have some write-offs. Right now, you're turning it from a hobby into a business. And at that point, yeah, you're going to want a bookkeeper, in my opinion. You're going to want to get some kind of licensing. You're going to want to do it the right way.
You want to have some kind of paperwork. I just ran into a gentleman recently,
right?
And he told me, he was doing fix and flips, and then of course, all his friends and buddies and family were like, "Oh, I want in on this." Right. So they started giving him money, and everything went great, and in making money. And then, like 2008, 2009 hit, and guess what?
Right.
It all of a sudden it went south, and he lost the places. Yeah. So then he lost the money. Now they were making money at times beforehand, and then all of a sudden it's gone. So they went after him, and he told me he actually went to jail for like 3 years.
Wow.
Because that was deemed fraud, he said, because he didn't have the right paperwork in place, letting them know, hey, this is an investment, this is a risk. And it was just all handshakes.
Yeah.
And everybody's your friend and buddy or family member until money gets involved.
Yeah.
And he said he made a big mistake with that.
Well, I mean, and here's the thing. If you're doing that, you really are just gambling, right? And so maybe the guy had the best intentions, but he wasn't really well educated, and everybody was winning.
Well, he was experienced. He was doing this, but we can't control.
Can't control.
It's a business, right?
Yeah, yeah. But I mean, I guess if I'm hearing your question, like you want to get into the business, you want to do it more as a hobby.
Still get it all in writing.
You have to get it in writing. Yeah.
At least get some kind of.
And frankly, just say no. I mean, if that's all you learn here today, just say, hey, I want to help you, but I can't.
Right.
I can't do it without paperwork. I can't do it without a deed. I can't do it with a promissory note.
So if someone even wants to give you money, it's hard to say no to the money. But what we're saying here is you need to have something in place to explain to that person you're taking money from that they may not get this back.
This is so interesting. Like if you have no money and you want to be a lender, just don't do it.
Right.
Just don't do it. If you want to be a lender, go get a mortgage loan originator's license. Learn about the business. If you're gonna, let's say you're gonna not do that.
Right.
And you're gonna raise money from friends and family.
Yeah.
Do yourself and them a favor and find out what a promissory note and a deed of trust is.
Okay.
Like, do your friends and family the honor of taking care of them, even if they don't know exactly what they're doing.
Right. Because we know this is a strategy. Real estate, we cover different topics of real estate investing here.
Yeah.
So, we got fix and flips. We talked about pad split. We talked about buy and hold. There's all these different, but this is a strategy of where people are spending thousands and thousands of dollars getting training on, go to your friends and family, get their money.
I gotcha.
And lend it, right?
I'm not in that loop, but I totally get it now.
Right.
Yes.
I mean, we're not always in that world, but we see that a lot, And so people are like, hey, I want to get in real estate. Oh, well, I can just go and talk to people, get their money, and then lend it, and then do this arbitrage, this spread.
How about this? Let's say you're going to do that. Don't be the lender. Be a JV partner on the deal.
Okay.
And make sure you're on the deed. So
what's the difference then between being a lender and being a JV partner?
Well, potentially nothing. But if you're a lender, you're really a third party.
Right.
Right. So you're really outside the deal. But if you're a JV partner, you're potentially inside the deal. So ideally you have more security by actually being a part of the real estate partnership or joint venture that's doing that deal versus
so being there, going there, getting updates,
getting involved,
visiting, making sure, hey, when's the flooring going in? Next week. Then go next week and make sure the flooring's in.
Yes.
That kind of thing.
I can see that. Yeah. Yes. Be accountable for the project.
Don't wait 60 days and then go and nothing's done.
No, man. I mean, you're pushing all my buttons, Rick. Be careful, right?
Right.
Be careful. You said this earlier. This is not you might get lucky and have a home run out of the gate, but don't do it like that, right? Because in fact, it's probably worse if you have a home run right out of the gate.
Right.
Because then you think you know everything.
So someone who's interested in this, wants to get into real estate, then this is not probably the best strategy if you're not familiar with lending. It would even be better, you would say, to maybe JV on some other projects and understand like what the fix and flipper does.
Yeah.
Because if you're just giving money to a fix and flipper and the fix and flipper doesn't know what they're doing,
exactly,
then everybody's going to lose, right?
Yep.
Because you have to be educated in what their job is in order to make sure your money comes back to you.
Absolutely.
So that's what we want everybody to understand, that just lending money isn't necessarily a strategy you just learn and that's it about real estate. You need to understand the whole process of what those people are going to do to make sure you can, we'll use the term underwrite, right?
Yeah.
Underwrite is to make sure they know what they're doing.
Yeah.
And their risks are kind of mitigated so that your money comes back to you. Especially like if you're accountable to somebody else and that's really their money and you're just making a spread.
Yes.
Because unfortunately, a lot of people think like, oh, it's not my money, it's not my project. And then you want to make money, but I hope people aren't as reckless to have this attitude, but they really don't have any skin in the game. If it just falls apart, it falls apart.
Yeah, I'm glad this is not a fluffy conversation, by the way.
Yeah.
This is not fluffy.
No.
There's so much money to be made in lending. There's so much money to be made in real estate. But it's easy to get hurt. And nobody wants to hurt any other people.
Right.
So,
yeah. And, we're not trying to scare anybody off or anything, but we just want we're trying to explain the reality, the real world aspects of this. And not the, unfortunately what we see on this side is we see a lot of the sales side.
Right.
And like we said, we just talked about earlier, there's conferences, things like that, just focused on this lending. So, okay, let's say this. All right, everything's said and done. It's me. I have a background in real estate. I've been doing this. I've done fix and flips. I've done all these things.
Right.
And people see it. I get offered money all the time. So I want to do it. What would you recommend for someone like me now, with more of a background, and I'm like, okay, I'm gonna start taking people's money.
Don't do
for
it.
projects.
Unless.
Yeah. What if I said, okay, I don't want to listen to you. I want to do it anyhow.
Do it like this.
How would I do this?
Okay. Promissory note, deed of trust. Don't say you're going to pay him later. Record the deed, right? You want to do it the right way.
Right. Work with the title companies. Yes.
Get a title report. Make sure there's no liens on the property. Treat them like business partners.
Right.
Right. Be the best business partner they've ever met. Right. Now you have a joint venture agreement.
There we go.
Right. Document that says who's going to do what and when, and if it doesn't go right, what happens. And it could certainly say you might lose all your money. Right. But of course, that's not the intention. Nobody wants to do that. So just set it up. Even if it's your first project, it's one project. Set it up like a little business out of the gate. It's not that difficult. It's a promissory note, deed of trust, and a joint venture agreement. And that joint venture agreement could be 5 bullet points, right? It doesn't have to be 50 pages.
Expectations, right?
Thank you, expectations. And then record it. Then go to town. Then go do your job, right? And if you don't make any money, your investors still need to get paid.
Right.
That's it. So if you're the sponsor, basically, if you're going to do the business, you're going to flip the house, make sure your investors get paid, because guess what? They will come back, right? They'll come back and do another deal with you. Educate them that, God, on the last one I made $400,000, but on this one I made nothing, but you got paid.
Right.
Right. So if you think about it like that, even if you're new, and if you're new or not new, it's not that much harder to think about it like a business versus being a gunslinger, which is fun, and being a wildcatter, which is cool.
Yeah.
That's part of being a real estate investor, right? We want to go fast, we want to go hard, but just dial it back, right? Because that will pay you dividends for the rest of your career.
Right.
Yeah.
Because there's all these different things. There's numbers, the aspect, but your relationship in this business is a big deal about that. All right.
Huge.
Let's move on to the other side.
Okay.
So part of your business then, like you said, you have your own money, but now you also have other people. So let's say I have all this intact and now I don't know anybody who wants to give me money, but I want to go out and raise it.
Yeah.
And how do I, one, structure that, and how do I go out and ask for people to give me money?
All right. So first of all, I've spent the last 3 years specifically paying money to craft this message, right? I've spent $25,000 on a fund documents with attorneys. It doesn't mean I've raised any money specifically because of those two things.
Right.
Okay.
So this is your structure.
So we're getting a structure
of getting the money from people.
Right.
And then using it to lend.
Okay. Well, so we're setting up a $24 million fund.
Okay.
Those documents are being reviewed at our attorney.
Uh-huh.
And we don't have time to get into that. But here's what it is at the end of the day. Go talk to people. Go talk to people. I'm raising money. Now, well, why should I do business with you?
Right.
So, do you have a track record? If you don't have a track record, that's not necessarily a problem.
Right.
Right.
Yeah, a lot of people can talk people into giving them money.
Yep. Right. But you might be, it could be anything, right? You could be an engineer, you could be a doctor, you could be a garbage truck driver. It doesn't matter. You have experience and you have expertise in some area of your life. And what you're doing is you're transferring that into a new area. Okay. So it's really the craft of communication more than anything that is going to help you raise money. So again, you might have no experience, but you've crafted a communication that lands with the people you're talking to.
Yeah, because it's called a pitch deck, right?
Yeah, it's a pitch deck.
And so that's comprised of all the information to make me feel comfortable to give you money.
That's right.
Right? And so a lot of people don't understand or haven't heard of that part of it. But yeah, you got to put, it's a business. So you need to put something together to show people, make them feel comfortable, and then show them how they're going to get their money back as well. Because just promising them a high rate doesn't mean anything unless their money comes back.
If I was going to do this all over again, first of all, I would go bigger from out of the gate, right? But again, because I mean, I still do fix and flips myself, right? Be able to communicate. I'm buying a house, buying it for this price. We think we're going to make this much money. We got these costs. Are you interested? And then have something in writing, even if it's like a 1 page. It doesn't have to be 50-page pitch deck, because you're building confidence in your ability to speak to people. You're building confidence with other people. They're getting to know you. They might not invest with you for 3-5 years, but then they see your growth.
Right.
Right. So it is. I was at a conference, and this guy who's raised billions and billions of dollars. Nothing is different for him today than it is for you. He has a bigger contact list, and he probably has 10% of those people who are going to say yes most of the time. But he's been doing this for 50 years, and he still does the same thing. Talk to people, have a pitch deck, build your credibility.
Right.
That's it.
It's all about relationships.
It's all about relationships.
And the resume of a good track record, not, what you just got to understand, anything's possible, right, in real estate investing, but it's not going to be quick and easy as it sounds like on other podcasts, let's say. It's
not quick and easy.
Yeah.
It can be, but
right,
it's not.
Can be. Yeah, that's why, we're not selling anything here in particular. We're I'm a real estate investment consultant strategist. Jules is a
same thing.
Consultant, strategist, lender. We're both have our different businesses, and we're telling you real world experiences of what we've seen.
And like definitely not a dream stealer, right?
Yeah, we want everybody to succeed.
Yeah.
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 And when the market's great and everything's going up and everybody's making it's easier, right? It's easier. Right now, not as much. So
not as much.
It's harder to find a good deal. It's harder to find, not necessarily the money because there tends to be more money out there, but you still need to do all your due diligence and work to make sure, because we want everybody to be successful. It's just you there's no quick, easy money in anything, right?
There isn't. I'm always reminded of like right in 2008 when everything was tanked. I was living in Sedona, and this newer agent came into the market and crushed it.
Yeah.
So there's always a little bit of cloudy days, and we want people to succeed, but like that can happen in any market,
right,
any time, in any industry.
Yeah, and that's fantastic it helps you, like you said, helps you just go big right out of the gate.
Yeah.
And so we hope that we see that again here soon, with anything, but it's just a little bit of work. So if people want to contact you,
yes, my number,
and have more questions, or maybe borrow money from me, or lend money to you.
Yes, all that. The easiest way to reach me is by texting me at 928-300-9685. I'll reply to text. Leave me a voicemail at your peril. Text me for sure. Yeah.
All right.
Thanks, Rick.
Excellent. So that's the best way. And so if anybody has any questions about the lending side, more to it, there's a lot of people looking to get into it, or interested in it. That's kind of, the basic fundamentals here, real world experience. But we wish everybody the best. If you have any questions, reach out to us. We'll be happy to help and either help you out or direct you to the right area, because we have a lot of other contacts with people doing all kinds of different things in real estate investing.
Yes, sir.
All right, Jules. Well, thanks a lot for taking the time. Appreciate it.
Thanks a lot.
Okay, bye.